Seema, let's talk about the second half of the second half. More pain to come.
Certainly. I think the first half of the second half was actually a little bit more moderate. You know, the first July, half of August, you had this almost really ridiculous optimism, I'd say, feeding into the market, and this hope that the Fed and other central banks would capitulate to weak growth. And then that realization that actually there is just one focus in town, and that is inflation, has taken all the expectations back to higher rates, lower growth, and of course, lower earnings. And that is what is pushing down the market, and it's not over yet.
Seema, is good news, bad news? Because that claims print about an hour ago, below 200K, got a lot of people thinking that. It's good news, bad news in the labour market?
It absolutely is. And this is almost where I think strong labour market is going to be the US's undoing. Because as long as the labour market is strong, the Fed has just got further and further to go. And they have to go. So they're going to be engineering a hard landing. That is almost the only way to pull down inflation. So the stronger the labour market is, the higher rates have to go. And of course, the higher rates have to go, the further things have to fall.
And they're engineering financial instability as well. Other countries are contributing to that. Seema, what kind of things do you expect to start to crack just a little bit more? We've seen it in the gilt market. Very, very unique to what's happening in the UK at the moment, with fiscal policy pushing the other way against what the central bank's trying to achieve. But how many more cracks are you expecting to see, and where and in what?
Yeah, you know, it's absolutely true. I think in the last couple of weeks, you do feel like this market frenzy is starting to really escalate. And at some point, it's going to hit that point where, you know, other things are going to break. And as you said, the gilt market, it is specific to the UK. But this is all driving in the same direction of concerns about inflation. Governments may be trying to offset growth, probably certainly not in the right ways than in the UK. But you can see that there is the same movement everywhere. Now, we are looking really towards the dollar. Where is that going to happen? Historically, every time the dollar has got to this point, something has happened. Be that some kind of intervention, some kind of emerging market crisis, potential liquidity problems, but that's what we're watching. And then throw into the mix quantitative tightening. And I do think that there's been a little bit of an underestimation of the impact that could have. So you're looking at really, really tight liquidity conditions, which is only going to get worse into a slowing economy.